Fannie and Freddie Mae, who do over 50% of the mortgages for the homeowners here in the US, they are going to make $20 billion profit in 2024 with half the volume they did in 21, 22, when all those mortgages were done. How insane is that? And they're doing this on the back of the homeowner that's paying higher interest rates, while Fannie and Freddie stick it to you, which we're calling a hidden tax on homeowners because of all these extra little hits, which in the industry we call loan level price adjustments. Yeah, so we can't even make this up, guys. Literally, this is just ridiculous. As you might not know, being in the mortgage industry, most companies out there, lenders, banks, credit unions, direct lenders, brokers, they're not making record profits. Their margins are really skinny. The mortgage industry is really tough. So how is it that Fannie and Freddie, like I said, who do tons, trillions of dollars of mortgages, are doing half the volume and making more money than they ever have? We have to stop and we have to think about this because this is insane. And they're doing it because they are charging the consumer more fees than I think they need to. I'm diving into this video today because I want to show you a couple simple things that we need to look at, as whether it's a new administration, the administration that's in there, anybody needs to look at, where we can actually go in right away like this and do a couple things that will reduce interest rates to help you, the homeowner, whether you need a refi, whether you need to buy, whether you need help with affordability. But when I break down some of these numbers, you're going to realize how much more money it's costing you just so the government can make more profit, when the whole point of Fannie and Freddie was created to have mortgages, to help homeownership, affordability. You know what I mean? It doesn't seem like it's really helping us too much these days. And guys, if you don't know who I am, welcome. My name is Kenny Simpson. I focus on 1 to 4 unit financing. That means I do residential loans. I've been doing it 20 years, helped over 5,000 customers. Couldn't stop counting after that point. So that means I've done this 5,000 times, like loans. So I've gotten really, really good at it, funded billions of dollars of loans. And I actually create content like this to help out educate you, whether the consumer, whether you're a renter wanting to buy a home, or you're just interested in saying, oh my gosh, what is going on in this video? What do you mean I'm getting raped? What do you mean we're getting this hidden tax? That's really what I'm calling it, because that's what I think it is. So welcome. If I can help you, below in the description, go down there. You can go ahead and contact me anytime. You can email me, you can text me, you can go on there and book a call. Hey, if you want to get qualified for a mortgage, go on there, fill out an app. I'm here to help, here and answer questions. But anyways, let's get into the nuts and the bolts of this topic, because I'm excited to get into it and figure out how we can help you, the consumer, save money today. Okay, so first let's tackle the basics. Let's just get it out of the way. What is LLPA, Kenny? What in the world are you talking about? Well, let's break it down. They are called loan level price adjustments. And these are given out like Fannie and Freddie. Basically, the easy way to think about it is it's the risk that they're taking, they're charging for it. But let me give you an example. It depends on the product. It depends on how much money you put down. It depends on your credit score. It depends on if you buy a single family 2-unit for you. It depends on if you buy a primary, second home, or investment property. All those factors matter, and that's how they price them all in. And based on your credit, FICO, the property type, you'll get spit out this kind of rate. And in that rate, in the background, that rate, if we're going to call it the hidden tax, there's those loan level price adjustments that are making Fannie and Freddie some nice profit at the expense of you. But let me give you a scenario, an example of what this exactly looks like, because you, the consumer, you're going to want to know. Okay. So with loan level price adjustments, let's say you're going to buy a property for $1 million, 20% down. The loan amount is $800,000 at a 6.99% interest rate. You have a 740 credit score. Your payment, principal, interest, taxes, insurance, at 6567 with no level loan or price adjustments. And look, keep in mind, Fannie and Freddie still making money. They're still doing okay. They're not going to go bankrupt. Your interest rate would be at 6.625. Same scenario, right? The rate. Principal interest is $63.72. Here's the crazy part. Over a year, you'd save $23.34. But here is the really scary part. Over 30 years, you would save $70,000. So folks, right now, for this particular scenario, you are paying $70,000 more over a life of a loan. So Fannie and Freddie can make all that profit. So who's benefiting from all these LLPAs? Like I told you, Fannie and Freddie, which are owned by the government. They literally, this year, Fannie Mae is supposed to make $12.8 billion and Freddie Mac is going to make $7.8 billion. So it's about $20 billion in net profit they're going to make. Hey, it's good. The government's in business, right? They're making money. I get it. Do they need to make $20 billion? That is the question that you and I need an answer to, and we'd like an answer right away, right? So this is all because there's all these low-level price adjustments. They were put in many years ago. Some were put in during the pandemic, during COVID, and they have not gone away. Even as interest rates have risen up, nope, no adjustment to them, no love to them, nothing. So Fannie and Freddie were created to make homeownership more affordable. So at the expense of the consumer, they are printing out these record profits. Affordability is at the lowest level, like I think ever, to buy a home right now. And every little bit helps. As you can see in the scenario I showed you before, the difference in pricing I put was around 3/8. Okay. But you're like, oh, it's only $194 a year, only $2,000 a year. Oh, $70,000 more over the life of the loan. Do you really need to have these hits in there? I don't know. What do you guys think? Comment below and let me know what you're thinking. Do you think these hits do you think this is right? Do you think this is wrong? Do you think this is gouging? What do you guys think? Comment below. So here's two solutions that we need to look at immediately when it comes to Fannie and Freddie. One of them I've been talking about for a long time. You might never heard of. So yeah, there's two actually. So the first one is the loan level price adjustments. We need to look at them. Can we eliminate them? This is ridiculous. If you have a credit score, there's buckets now. Whether you have 680, 700, 720, 740, 760, 780, you're getting all these hits. So I think we need to simplify it, eliminate a bunch of this stuff, and get those rates down to help consumers and affordability. Number two, one thing that you might not know, if you're doing an FHA loan, or a VA loan, you are not, once you buy a home with an FHA or VA loan, you're not allowed to turn around, just refinance like that. You can't. You have to wait 210 days. There's a countdown. So with that being said, there's almost like a prepayment penalty, or just you cannot refinance, right? But with Fannie and Freddie, you could buy a home, refi, turn around and go refi with another lender in a month or two. Which you say, hey, I love the flexibility, it's great. But what you don't know, it's actually hurting you, the consumer, and everybody else. Because when you do a refinance, let's say you do with me, and you turn around in 90 days or 60 days and turn around and refi with somebody else, what you're doing is you're screwing me. So I have to pay back my commission. The lender I took you to have to pay back theirs. You're hurting Fannie and Freddie, right? The servicing all the way down the line. So what that means is they know you can do that. So with Fannie and Freddie, you get that flexibility where there's no 6-month lock-in effect or 12-month. And because of that, they actually make the pricing worse. So it's like having the loan level price adjustment. So the scenario I gave you with this 3/8 better, if we could have a lock-in effect where you could not refinance and you have to pay back the interest or something for 6 months or 12 months, you would actually even get better pricing. It could get better by an eighth or a quarter. Like, no joke. Like, so we could be talking about, like, worst case, a half a point better in rate, folks, in rate, if we made a couple adjustments, because not everybody turns around and refinances in 60 days or 90 days. And if you're not that person, you're getting penalized along with everybody else because of those people are allowed to do that. It's almost like living in a state where there's no insurance, there's not much going on, there's no earthquakes, tornadoes, fires, landslides, but you are paying higher insurance because of places like Florida or California, things like that, because of all the catastrophes. You're paying more premium on your insurance because you're bundled with everybody else. That's what's going on here with Fannie and Freddie. So will 2025 be the year we finally start looking at solutions to get rates down, not just looking at Jerome Powell, not just looking at the 10-year treasury, not just looking at the spread between the 10-year and 30-year fixed? I just gave you 3 other ways rates could come down. We need to look at Fannie and Freddie overall of everything and see, is this really fair to be charging the American people all these hits that are basically, do we think it's fair when all the rest of the mortgage companies are suffering, not making money, but Fannie and Freddie are making record profits on the back of Americans? I don't think so. I think we need to simplify these loan level price adjustments. We need to simplify how the ability to refi that quickly, Fannie and Freddie loans. We need to educate the American people that, hey, if we can make a couple of changes here, it might be a little bit different how we do business, but this is going to result in better pricing. So lower rates, lower payment, and over the life of the loan, we're talking, folks, is it $70,000, $50,000, hundreds of thousands of dollars, depending on your scenario, depending on your loan amount. We're talking substantial savings over the life of a loan. Hey, If I can be of help to you, below in the description, hit me up. Let's get on a chat. Shoot me an email or text. I'm here to help. Thank you so much. Talk to you guys soon.